Welcome to the world of Forex. Forex, or foreign exchange, is the global marketplace where national currencies are traded against one another. Currencies are always traded in pairs. The first currency is the base and the second is the quote. The price tells you how much quote currency is needed to buy 1 unit of the base. A pip, or percentage in point, is the smallest price move a currency pair can make. It's usually the 4th decimal place in a price quote. Trading volume is measured in lots. A standard lot is 100,000 units, but beginners often start with mini or micro lots to manage risk. Risk management is key. A stop loss automatically closes a losing trade to prevent further loss, while a take profit closes it once your target gain is reached. Margin is the deposit required to open a position. Leverage allows you to control large amounts of currency with a relatively small amount of capital. Time frames represent the duration of price data on a chart. Traders use different scales, from 1-minute scalping charts to daily or monthly swing charts. Candlesticks show price action over a specific period. They display the opening price, the closing price, and the highs and lows of that time frame. A green candle means the price closed higher than it opened, showing bullish momentum. A red candle means it closed lower, indicating bearish pressure. Limit orders let you trade at specific prices. A buy limit is set below the current price to buy the dip, while a sell limit is set above to sell the rally. To start, you'll need a reputable broker. You can open a demo account first to practice with virtual money before risking real capital. Opening a live account requires standard identity verification, proof of residency, and your initial trading funds. Always trade responsibly.